Bitcoin adoption model, expert insights and strategic outlook. The momentum of an unstoppable revolution. Bitcoin has evolved from its niche roots as a decentralized monetary experiment into a legitimate global financial asset. By 2025, the narrative surrounding Bitcoin will no longer be limited to speculative investment, but instead extend to institutional portfolios, national reserves, and the everyday discourse of financial professionals. The ongoing developments in adoption, investment, and integration into financial systems around the world signal a transformative era, one that experts predict will lead to unprecedented changes in global economic structures. This analysis delves into the core drivers of Bitcoin adoption, the implications for various stakeholders, and the transformative effects it will have on global finance. Initial skepticism and breakthroughs. Bitcoin's early years, 2009 to 2017, were marked by skepticism. Financial institutions and governments viewed it as speculative or disruptive. However, as blockchain technology matured and Bitcoin's proven ability to operate outside of traditional systems became apparent, its role as digital gold became clear. Institutional involvement, starting with companies like MicroStrategy, Tesla, and Square, legitimized Bitcoin as a hedge against inflation and a store of value. Companies that had previously ignored the asset are now actively allocating billions of dollars, with MicroStrategy's holdings exceeding 150,000 BTC. El Salvador's groundbreaking move in 2021 to adopt Bitcoin as legal tender set a precedent. Countries like Bhutan and smaller U.S. states have begun exploring Bitcoin as part of their strategic financial frameworks. 2. Institutional and sovereign integration, a deep dive. Institutions have moved beyond temporary allocations, adopting Bitcoin as a core asset. A MicroStrategy has demonstrated long-term institutional confidence by consistently buying Bitcoin. The world's largest asset manager pursuing a Bitcoin spot ETF represents a sea change, opening the floodgates to both retail and institutional investors. An unprecedented development in the U.S. has seen states like Florida, Texas, and Connecticut consider Bitcoin reserves. Florida's $1.3 billion initiative, the proposal to allocate state funds to Bitcoin, is a precursor to similar moves by other states. By early 2025, 13 states are drafting laws for Bitcoin reserves, a number that is expected to grow exponentially. Sovereign wealth funds in countries like the UAE are quietly accumulating Bitcoin. By diversifying their reserves, these funds hedge against fiat currency devaluation while positioning themselves for the currency of the future. 3. Market catalysts and adoption drivers. ETF approval. Bitcoin spot ETFs have dramatically changed the investment landscape. A liquidity injection. ETFs allow institutions to invest without the technical complexity of managing wallets. Increased accessibility and demand will drive Bitcoin prices higher. The fixed supply of Bitcoin, 21 million, ensures its deflationary nature. As companies and governments accumulate Bitcoin, its scarcity will increase, creating a feedback loop of rising prices. Individuals will scramble to secure a fraction of Bitcoin as its perceived value increases. The halving effect. Bitcoin's programmed halving cycle ensures that mining rewards will decrease every 4 years. What the 2024 halving means. With the reward halving to 3.125 BTC per block, supply constraints will coincide with increasing demand. 4. Strategic implications for national reserves. Smaller economies lead. Countries like El Salvador and Bhutan demonstrate how smaller economies can benefit from Bitcoin. Economic inclusion. Bitcoin provides access to the global economy, bypassing traditional financial gatekeepers. Remittance efficiency. Lower transaction fees have a significant impact on GDP, which depends on remittance flows. Larger economies catch up. While larger economies like the United States and Germany are cautious, their eventual participation is inevitable. A geopolitical leverage. Holding Bitcoin could provide a strategic advantage in a global economy increasingly reliant on decentralized systems. 5. Projected milestones. 2025 and beyond. By 2025, Bitcoin adoption as a reserve asset is expected to reach a tipping point. Companies are expected to hold 10 to 15% of the total Bitcoin supply. A government holdings could account for an additional 5 to 10%. Price forecast. 2025. Analysts predict Bitcoin will hit $250,000, driven by adoption and scarcity. 2030. The $1 million per Bitcoin forecast is becoming increasingly plausible as network effects build in. 6. Challenges to adoption. Regulatory uncertainty. Inconsistent policies across jurisdictions remain a barrier. While the US has approved an ETF, European adoption varies significantly across member states. International regulatory harmonization could unleash Bitcoin's full potential. Environmental concerns. Bitcoin mining's energy consumption has been criticized. Renewable solutions. Countries like Bhutan demonstrate the feasibility of sustainable Bitcoin mining. Technological advancements. Next-generation mining equipment promises greater energy efficiency. Despite growing awareness, misconceptions persist. Educating the public about Bitcoin's potential could reduce resistance. Companies can lead by example, integrating Bitcoin into the everyday financial ecosystem. 7. Bitcoin and the financial ecosystem. 7.1. Integration with DeFi. Bitcoin's compatibility with decentralized finance, DeFi, is expanding. Technologies like Rootstock, RSK, enable smart contract functionality. Connecting Bitcoin to other blockchains increases its utility. The Internet of Money. Bitcoin is poised to become the primary medium of exchange in the digital economy. Seamless transactions reduce friction in international trade. Bitcoin's divisibility enables new economic models, such as pay-as-you-go services. 8. Implications for investors. Long-term wealth creation. Bitcoin remains one of the most profitable long-term investments. Institutional hoarding is likely to drive prices higher. Retail investors can accumulate a fraction of Bitcoin through dollar-cost averaging. Diversification benefits. Bitcoin offers unique advantages in a diversified portfolio. Its deflationary nature contrasts with inflation-prone fiat currencies. Bitcoin's price movements are often different from traditional assets. 9. Predictions for the Bitcoin-driven future. 1. Hyper-Bitcoinization. A scenario where Bitcoin becomes a global reserve currency is increasingly likely. Countries with significant Bitcoin reserves will have economic leverage. Pricing goods and services in Bitcoin will simplify international transactions. Point 2. Social impact. Bitcoin adoption will have profound societal impacts. Financial inclusion. Billions of unbanked individuals will have access to global markets. Redefining wealth. Bitcoin ownership will become synonymous with financial security. 10. A call to action. Bitcoin's trajectory is clear. It is not just a financial asset, but a paradigm shift in how value is stored, transferred, and perceived. As we stand on the brink of mass adoption, individuals, institutions, and nations must recognize the unique opportunity that Bitcoin presents. For those who act now, the potential rewards are enormous. For those who delay, the costs of inaction will only increase. As the world moves toward a Bitcoin-centric financial future, the time to get involved is now.